And that's part of why it actually works and it's legal if you do it properly. But if you don't have the team and you don't set it up prior to, we want to be here right now to make it simple for you, to clarify if it's legal, how it works, and why it might be a great fit for you, or maybe not, right? I mean, we're simply telling people maybe why it doesn't work, why it's probably not a good fit based upon their circumstance. And so our goal is to just share journey and just invite you to be a part of our community so you can help yourself or your clients create and preserve more wealth. That being said, I am joined by some amazing and they are with me as a way to help execute on this deferred sales trust. First one being Jake Miller. He is a certified financial planner. He's the and it looks like he might be. We'll let him come back here in a minute. Do you see him? Wait, here he is. Jake, are you still there?
I have a lull in my internet, but I'm back. So happy to be here. Glad to be calling in from Mazatlan, Mexico, where we have some clients right now with their deferred sales trust, as well as with other investments looking to syndicate, looking to do joint venture and get some higher returns, acknowledging that there is higher risk going out of country. And so just some fun things that we do for those clients when it's appropriate, when they ask for it, when they meet the requirements. And it's fun and it's exciting, and I have great weather and a great office for today.
Excellent. Yeah, Jake and I were just in Mexico together at Los Cabos. We did a workshop one-on-one. There's about 15 or so high net worth and purpose-driven investors, entrepreneurs. So we were able to do some coaching and some training on the deferred sales trust and investing and planning. And so that was really cool. Jake just flew back over to Mazatlan, and then I flew back to California, where I reside right now. We're also joined by Pierce York. He helps to co-host the podcast. He's a Newport Beach commercial real estate and luxury real estate specialist. Pierce, how are we doing today, brother?
We're doing awesome, man. We had a great call this morning with Jake and a potential good lead for us. So excited about that. It's been a good day.
Excellent. We also got Rebecca Munson. She's in the house, and she's our luxury specialist, real estate specialist up in the Lake Tahoe, Truckee area. Rebecca, how you doing?
I'm doing great.
Phenomenal. All right, so let's get started. We really cover three things. Kind of the vision, we talked about that kind of already, and then we covered deal stories, right? And then frequently asked questions. There are things or objections that are coming up. And then we open up for questions for anyone. It could be a live deal, it could be a potential deal, it could be a deal for your client, and we open up for questions. And so, Jake and Pierce, I'd like to walk through a deal this week, right? This is a scenario where a gentleman, in fact, Jake and I met a daughter of a gentleman who is selling or potentially selling some assets in the Northeast region. Some convenience stores, some gas stations with some brothers. And this is a classic example, Jake, of kind of like running out of time, right? Not even knowing about it. In fact, we wouldn't have known about it if Jake and I weren't at this real estate kind of mini summit speaking on the deferred sales trust. But it came up, Jake, and then, jumping on calls, trying to get things moving, but running out of time, or it's just too much. So this is a common thing, Jake, right? Where people are running out of time. But walk us through, Jake, if someone's in that shoe where they've built a business for 10, 20, 30 years, and they're going, Jake, like, this seems like I would have already known about it. It seems like it's too good to be true. And man, am I really going to be sending millions of dollars to an institution with people that I have never met before and a trustee that I've never met before? Walk us through, Jake, how you would handle that objection.
Absolutely. And Brett, you bring up a very good question.
directly to our team and myself and the client listening, being right there, so he can see the discourse. In fact, that's how most of our deals actually happen. People are coming to us for the first time, and then they're bringing their trusted professionals in. We have a long runway, ideally 30, 60, 90 days, 100 days, a year before closing. In fact, just closed a deal yesterday. This was a land deal out in Georgia. Worked on it for about 2 years. Part of it is because it got stalled multiple times with land deals, always sooner than most deals. But 2 years and extensive time and energy spent, and that close. Guess what? When we have more time to digest, and that's most people, if you are not now or not in these masterminds with us and getting to know us, like us, and trust us, and have your CPA, your financial advisors, whoever the people are going to have the big questions, the commercial real estate agents, the tax attorneys, the M&A advisors. Time squeezes the ability for you to digest what the evidence is and how it works and why it's a good fit for you. And that's the worst part about it. So Jake, let's see if your internet is going to wide here.
Let's try it out. Does the same thing. I have one more option. Right? My phone just fell. So embarrassing. No, but that's what this is all about.
I will.
withholding, it's typically 3 1/3%, when the funds that are owed to California or due to California. And that withholding, by the way, we always participate, and meaning we always have all of our deferred sales trust transactions, if they're in California, they have, or any place that has withholding for that matter, are going to be sent to the state agency. So that's part of why we have a perfect track record. Thousands of closes, billions under management, most deals done in California, and not a single negative result. Okay, and so they're talking about imposing a failure to withhold. So the question is, are we withholding? The answer is always. Okay, all right, great. Number 2, it says the purpose of this notice is to inform qualified intermediaries that the Franchise Tax Board will impose failure to withhold penalties against QIs who actively participate in structures where boot or proceeds from an attempted like-kind exchange are converted into an installment note or similar arrangement in which payments are to be paid back over 2 or more years. So again, first thing is, did you withhold, right? Yeah, we withheld. Okay, so got it. So if you've already paid with California, this is not the IRS, this is California, this is not the Internal Revenue Code, which, by the way, the installment sale is based upon IRC 453, which is a federal tax code. It's not a California tax code. Okay, so they're talking about California holding. Talk about whether or not the federal IRS doctrine of 453 actually works. In fact, if you go down, this says number 2, it says California conforms to IRC section 453 pursuant to the Revenue and Tax Code section. Basically, it's saying it agrees and conforms to the federal doctrine of IRC section 453, right? So this is not saying that 453 does not work. It is not saying that they don't conform to it or they don't recognize 453. It's simply stating that if you're going to not withhold what's due to California, which they're absolutely correct, then there's a problem, and we're going to impose penalties. Okay, so watch what this blogger does. This is a blogger, okay, and they're an exchange company. Look where he takes us. And also, by the way, did you notice, Pierce or Rebecca? Did they say anything about deferred sales trust? Right. In fact, let's search deferred sales trust. Deferred. Okay, deferral, okay, deferral. Anything about deferred or deferred life exchange? Is anything about deferred sales trust? In fact, there's not even deferred sales trust in there. Is there even a DST in there? No DST. But watch what this blogger does, and we call this the drive-by, or really, it's their opinion and their interpretation of something that, like Pierce said, we don't think they wanted to think it could be true. It says the California Franchise Tax has officially put that 1031 exchange qualifies intermediaries on notice that FTC intends to assess failure to withhold penalties against qualified intermediaries when certain tax deferral installment strategies are used to save a failed 1031 exchange transaction. Okay, and he goes on, and guess what this guy uses. He says these tax installment transactions have been voted under various names over the years, including private and trust, deferred sales trust. All of a sudden, he's imposing the deferred sales trust into this notice, his interpretation of this, right? And essentially, now he's saying that these deferred sales trusts, you got to be really cautious. And so what people do is they take this and they think that, oh my gosh, this thing must not be legitimate, it must not be real, it must not be legal, right? They take this step of they're jumping, right? They're jumping to this big conclusion when it's all just about withholding, right?
Can you dive into the definition of withholding and what they?
So I mean, by the way, if you look up FTB withholding 1031 exchange. Okay, so if we look this up, so essentially California has a 3 1/3 of like basically tax that's owed to them. Okay, that they want, that they're due to them. And we think what happened was certain groups were not withholding that, and they were sending it all into like an installment like structure. And when they did that 3 1/3 that was due to them, California wasn't getting. And so they're saying, hey, franchise, so they're saying, Mr. Qualified Intermediary, do not cooperate. And you know, we're going to put you on notice that if you cooperate with these things, this is not okay. What is owed to us is owed to us. But basically, it's a 3 1/3% tax on the gain, right? 3 1/3 tax on California sold properties, right? So let's see if it comes up here. Here we go.
Is the transfer tax?
From withholding tax property. What is the California law for withholding on the sale of California real property? Buyers should withhold 3 1/3% of the gross sales price on the California real property interest from both individuals, natural persons, corporations, trusts, pay the amount of the franchise tax board, and pay this amount to the franchise tax board. However, most sellers qualify for an exemption, meaning that usually no California withholding is required. And so this, you can read this whole thing. I'll put it in the chat here, okay? And you can check it all out. But that is what's due, and that's the thing. That's what we've always followed. That's also why multiple California audits have happened. No changes, no findings. So this is
a couple of questions.
Yeah.
So it says it's real property. So if you're selling a business, I don't know. You know, I know residential real estate, a little bit of commercial real estate, but if you're selling a business, that's not real property. So
exactly right.
Okay.
So if there's no 1031, in
Right.
fact, one of the clients we're working with right now, he's selling a business in California. So I replied to him real quickly. I said, hey, this doesn't even apply to you, and I'll explain to you later why. But you're not even in a 1031 exchange,
Right.
right?
Yeah.
And so, but people's minds, if they just take this and they just go, oh my gosh, like, oh, I don't want to get in trouble. It seems too good to be true. I read this thing on the blog. Like, hey, you're not even a 1031. You're selling a business, so it doesn't even apply to you. Number two, if you're selling a primary home, you can't even do a 1031. So, like, this is a default. You have to be at a qualified intermediary. Number three, we have a qualified intermediary in California. They've been doing it for 25 years. They're amazing, like one of the best in the entire I think the entire country, what they do. And you think that their attorneys would say, you know, we have a problem, right? And say, oh my gosh, this blocks us. No, they were like, no, we withhold. So there's no problem. So there's just so many things here where you just go, oh my gosh. And so this is what we battle every day. And these are legitimate questions, right? But realize that it's still batting 1,000. Like, it's still perfect. Like, it's perfect. It's never lost. Never lost in California, you know, never lost. And then we have other states. So this is the other fun thing too. People like CPAs in other states will look this up, and someone is selling a business in Texas, and they're talking about this California notice, and they're like, what? And again, they're throwing stuff sometimes at the wall because they're moving really fast. Now, to the CPA's defense, these clients sometimes are putting it on the CPA's last minute. And like Pierce said, they're like almost saying, if you don't say yes to this, I'm not moving forward. And the CPA is going, I've never heard of it. They do a quick Google search and they're like, here's some red flags that, you know, and they're trying to basically cover themselves, right? To say, you make a decision. I wouldn't do it, you know. The common one is like, oh, I wouldn't do it. Now, here's the other side of it. This, instead of taking the approach of, I'm going to put all of my trust in my CPA who's never heard of this, like kind of like going to a general practitioner and saying, he does your blood test. He's like, oh my gosh, you have a tumor in your brain. You got to take it out. And the general practitioner's going, well, I've never done that before. And the guy goes, no, you can only do that for me. If you don't do this for me, we're not getting that tumor removed. And the guy's going, man, I've never done that tumor before. Like, maybe we can go find a guy. And he's like, no, only you can do this. Only you can say yes. And it's like, well, why don't we go find that professional together? Why don't we vet them together? And why don't we ask good questions together? And why don't you, Mr. Client, pay the CPA to do that? Bring up good questions. And that's the cool thing about the way we work. We work with everybody. We're like, hey, bring your CPA. We work on a conditional basis. If for whatever reason you guys don't move forward, you don't owe us a thing. But allow us the opportunity to set everything up, get it all properly prepared, review all of your options, and then if you want to execute, we get paid right at the close of escrow. So Rebecca, what are your thoughts on that?
You answered all my questions on that. I mean, having real estate for over 20 years, I know what the exemptions are typically for that transfer tax of 3 1/3, and kind of crazy, but just wanted to double check.
Yes, and so these are good questions. So if you're watching this, you should look this up. If you're actually selling investment property and you're concerned, well, then why don't we just close it? Like if you actually really think like this is something that could affect your ability to defer the tax using the deferred sales trust, well, then why don't we just close of escrow? Oh, so I don't have to go to a qualifying intermediary. Close of escrow, right? But more than that, why don't you talk to the qualifying intermediary that we work with that's been doing it for 20 plus years, that we do business with all the time. Why don't you talk with our tax attorney? Why don't you talk with our clients? Why don't you look at the track record? Why don't you do all of the other things? By the way, bring in your CPA or the trusted advisor who has an objection, and let's all get in a room. Let's talk about it. And this is what I found: 99.9% of the time, they join us. They're thankful that we walked them through it. And those same CPAs who have that objection are bringing us more clients. And so, if you want to learn more about this, again, you go to capitalgainstaxsolutions.com. We actually have a free ebook you can download. And it's like the 9 steps to closing the deferred sales trust, and it breaks down step by step, what you need to prepare for, the planning, working with us, what that looks like. That's capitalgainstaxsolutions.com. I want to see if Jake Miller has a great internet, because I'm sure he has some amazing insight to what we've been talking about. Let's give Jake a shot. Jake, how are we doing?
Doing very well. I think a lot of this is just helping people become comfortable with something new that perhaps they didn't know was around, and bringing in these specialists. And oftentimes that works best when the specialists are able to talk to their current and local advisors, help everyone get on the same page. So in the room, we have the client, we have their CPA, their advisor, their attorney, whoever, and they're all nodding their head, giving the client an additional level of comfort. Because even if they don't understand every little piece of it, the people that they know, like, and trust can achieve that level perhaps a little bit more quickly. And we can help them with this transaction, even if it's late in the game, like the 11th hour, so to speak. Now, of course, this last deal that you brought up in the very beginning, Brad, literally there were 5 days to try and accomplish something with a group of people who all needed to become educated. And I think that they liked the idea quite a bit, but needed more time. They just didn't have more time. It was a little bit of a stressful situation where family business was being split and sent into a lot of different directions. And had we come in and been introduced to them 2 months ago, it would have been a home run. Absolutely.
Yeah. So this is part of why we're here. So we're hoping you're watching us on YouTube, you're hearing this on a podcast, and you're thinking, I might be selling something in a year. Maybe I should start planning. And the answer is, yeah, you should, right? And there's no cost and obligation to plan with us and to go through these scenarios with you. We're happy to do it. And which leads into, why someone may not want to do the deferred sales trust. So I'm going to throw it to Rebecca. Rebecca, what do you think some of the reasons that someone may not want to do a deferred sales trust? Or maybe another way to put it, like, who qualifies for a deferred sales trust?
So who qualifies for a deferred sales trust? People selling their primary homes. If they don't, depends on what their plans are then in the future to what they want to do with the proceeds. People are selling investment property, selling any of highly appreciated assets. So it could be a business, cryptocurrency, that kind of thing. That's a little out of my.
There we go. It's great. Pierce, what's our minimum? What to make sense and what?
Me?
Pierce.
Sure.
Thank you.
So the minimum is $1 million net proceeds, $1 million gain, or 2 $500,000 transactions. The reason is because there has to be enough pain there to go through the the process, right? And it has to make sense, and it has to pencil, and there has to be a good return on the back side. It's too little, it doesn't be. It's not an all.
Great answer. Jake, so we know who it qualifies for, right? By the way, it works for crypto, business sales, limited partnerships, LLCs, S Corps, C Corps, luxury primary homes, investment real estate, NFTs, artwork, collectibles, really anything that has $1 million gain, $1 million net proceeds. Jake, talk a little bit about just the lifetime audit defense that would mean for somebody, because the other part could be that the CPA could say yes and feel good, but man, the client and the CPA are concerned that if an audit does happen, that could be very expensive, and they don't even know how to defend that particular audit because they've never defended it before. So talk about what's included with the DST.
actually spoke with a client that owns a solar company in California yesterday who was very interested in the DST for 2023. He's looking to sell his business. And his CPA on the phone call asked that very question. Says, hey, I'm kind of like that general physician, and the people who are specialists in this DST are pretty much the brain surgeon. My insurance and my ability to protect the client, this is what the CPA said, is not that of the brain surgeon, in the sense that a lot of other professionals are extremely excited and happy that they can shift risk of something that they don't know in and out to the individuals who are the specialists who do know it in and out and who do provide lifetime auto protection. Now, this is not an insurance policy. This is their legal firm, their law firm, signing a contract that for the life of the Deferred Sales Trust, the fees that you pay upfront will guarantee you representation from their firm for the life of your trust and the transactions of your trust.
And no additional charge, right? So yeah, that's the amazing part. So it's a one-time fee up front. But if it was $1 million of legal fees, probably never be that much. But imagine it was to defend you, state or federal, they will defend and they will do it at no charge to you and no charge to the trust. It's just completely covered lifetime audit protection, lifetime audit defense at no additional charge, which is huge, right? If you think about that, that's basically, to me, it's a big thing, because they're going, we're very confident not only in what we've done, how we've defended it, and how we've been able to close out these audits if and when they do come up. By the way, it's been over about 20, including federal and state, random audits, including promoter audits. It's all been no change, no findings, never on a dirty dozen, never on the IRS watch list. Like, it's still batting 1,000, right? You get to the plate, it hits a home run every time. Okay, so they're defending that, and they're standing behind their work, which is great. As well, they're working on a conditional basis up front, as do we, to make sure that it actually is a good fit. We can actually put it in place in time in case you do want to execute it. Jake, you want to add anything else to that?
Yes, I was just going to add that, I mean, they have extra incentive to make sure that you have a good outcome should you ever be audited. They currently have a 1,000 batting record, right? Or 100% track record with the IRS. And they wouldn't want just any Joe attorney to try and get up to speed to represent you, because some insurance policy is paying for that. They have additional incentive, whether your case is big or small, for them to step in whatever is necessary, even more than the premium you paid in the beginning. They don't have an issue expending more than that and representing you to keep this as an ironclad strategy, because that is rare in the industry. That is rare in the industry, and for them to be able to maintain that's prestige and that's powerful, and they're maintaining the integrity of their strategy across all clients by ensuring that not one of them loses the power of the strategy.
Perfect. So we covered the content there, right? So that was pretty heavy. It was pretty deep. Some practical application. We'll talk about a deal story, maybe two, but I've got a number this month. But before we go there, remember the 3C action you can start taking right now, whether you are the client, potential investor, entrepreneur, business owner, primary owner that's listening to this and has the multi-million-dollar gain and is considering your different options. The first thing you want to do for the first C, stands for capital, T stands for tax, is you've got to shift your mindset to a capital and tax mindset. It's a capital and flow mindset. What do I mean by that? What I mean is that you got a capital gain in capital plan, the cap part, right? What that means for you, and what that means for your next business venture, and what that means for you personally, your personal budget, all of these things. That's the capital mindset, right? The wealth mindset, if you will. And then there's the tax, and this is the tax flow mindset. And it's essentially connecting these two, or trying to get them to line up as best as you can. Let's imagine you have a Rubik's Cube as your situation, and all of ours have some different colors on some different ends. And our goal might be to get one side as congruent as we can. And that could be with some of the freedoms that we're looking to accomplish. And all of us are searching for certain freedoms. And that could be retirement freedom, It could be entrepreneurial freedom. That could be the freedom from the 1031 exchange, freedom from estate tax, location freedom. It could be a partnership separation freedom. It could be just diversification, liquidity freedom, or debt freedom. These are all these different freedoms. And the question is, which of these freedoms or multiple freedoms is going to help you to get to as congruent as you can for your life and your wealth plan? And that's by taking a capital and tax flow mindset, because guess what? Tax is the big barrier. In fact, it's typically the number one reason people are not selling, because it's 25 to 50% of their gain is going to be wiped out by the tax. So most people just say, A, I'm not going to sell. B, I'm only going to sell if I can get that 1031 perfectly lined up. C, I'm not going to move out of the house because I don't even have a 1031 option. I'm just going to die and get a stepped up basis, maybe rent it out for a couple of years and then maybe do a 1031. 4, I might have to give it all away to charity. And so all of these things create situations where people are not taking action because they're not unlocking and solving their problem with a solution or having a team to help them solve the problem. That's what we want to do. So we want to have a capital and tax flow mindset. What actions are you going to take, or what actions could you take, and how does that help you to get to where you're trying to go? So that's number 1. Number 2 is a capital and tax pro DST dream team or machine, right? This is the actual product or actual strategy is going to help you get there. By the way, it could be a DST team. It could be an opportunity zone team. It could be a charitable team. It could be a 1031 team. Like whatever that is, make sure you have a dream team. You have that strategy, and that everyone understands that strategy is going to help you accomplish 1, 2, and 3, and 4, and help you to avoid the pain of 1, 2, 3, and 4, right? And it's narrowing in on that and knowing what that it can actually do for you. With the Deferred Sales Trust, we can do a number of things that are incredible. And in fact, it's part of how I help people understand that this Deferred Sales Trust is an investment, not an expense. Most people get maybe a little bit concerned because they feel like the fees are high, and the fees are substantial, but you're getting a high level of expertise and execution. But the trust is able to unlock so many neat things like new depreciation schedules, like optimal timing, like diversification, like eliminating estate tax, like having the funds to be an entrepreneur with you, to go buy a business or start a business. You be the entrepreneur, and the trust is a silent joint venture partner. So all of these little things add up. You go, oh my gosh, this is an investment, not an expense, versus just the first ROI, which is typically just I'm deferring X amount of tax and I'm getting X amount of return. That's ROI number 1. So I want to make sure you understand what the machine does and how it can actually help you achieve those things. And the last thing is the last C&T is capital and tax flow multipliers, which have to do with the investments, because it's just as important that the tax strategy works for you to achieve what you want to achieve. But if the investments aren't performing, then guess what? If you're not paying a team to execute that's through financial like Jake Miller. That's through amazing if I have to owners a commercial real estate team help you do that. And then that's through the tax attorneys, that we work with. And so as we together, and by the way, a lot of our entrepreneurs, they already know how to make money in this. That's great. We're like a part of your team, joint venture with the trust to go do your own deals, and you can multiply that and have another promissory note. So these are all the things that if you spend enough time with us, we have. And by the way, you can go to experttaxsecrets.com. We have our coaching program that's open for business professionals. It's going to be live here in about 30 days. And we have all kinds of new content organized where you can go step by step and you can become a Deferred Sales Trust. Really, ninja is our goal there, right? But also capital gains tax solutions ninja, where you have different comparisons. And essentially, we're going to create this educational content and material that you can always come back to in an organized way to get the fundamentals. Because like anything, you got to study this and you have to practice it, right? And study and practice it. So that being said, Jake, any thoughts on the 3 C's and T's? Hey, Leah, welcome.
Brett, I think it's incredibly important that people understand the parts and pieces of what affects them the most. That's how we're going to optimize their current financial situation. I always comment on the 2 sides of the coin. You've got your rate of return and you've got your taxes. And we have to look at both, because you can have the biggest rate of return, but if you're paying the largest amount of taxes, your net is less. A lot of times people aren't looking at their net. They might just see the big number over here and forget about the big tax number they have to pay. And so if they can optimize the two of those, they're going to have a much better Christmas, if you know what I mean.
Great. So what questions? We're going to open up questions here. Chat on your same call. Anybody have thoughts, questions, or comments? Feel free to-
Have a skill story that you want. I know it's
More than one in the